Welcome to TradeTheNBI.com. This is John. This report is for the 28th. Well, the market continuing to show its weakness with that NBI white rising, and we got what we were looking at here was that dip below the 25 that happened the other day, and it continued to stay underneath there, and that's why we saw the continued weakness. Now, the fact that you have the dip below here, 23% will not hold. So, there's that. Pretty straightforward. You can see the shakeout has returned to negative, and we talked about this. Once you get a rising shakeout move, you've got to have the corresponding move to the positive side. Otherwise, you just get into a continuation move. But as we were discussing before, my expectation was that when we came up, we would come back down, potentially creating a higher shakeout on matching lows, and that would be a divergence to the upside if it takes place. But we'll see. It was a pretty quick rise of the MBI white, so it may not be strong enough to create that dip. Otherwise, it would have to be pretty darn fast for it to happen, which it's possible. Likewise, here you can see NASDAQ was even cleaner from these readings here with that MBI white. As soon as there was a fade of the magenta relative to it, and it was all weakness spilled out. It matched itself here cleanly with that crossover at the DOC here with the cyan taking over green. So all those things, just incongruence, give you the clear picture. And the rollover from the shakeout on the Nasdaq has still been in the deep red, so there's been no change as far as that goes, even in the pop up. And that's exactly what bigger players are looking at, saying, "Hey, no, this isn't done. We'll just go ahead and continue to short any new pops." So it's only in some kind of unique information space where something that nobody expected happens that you would get a turnaround. Treasury's still caught within the same range. They're actually starting to move out of it, so that could be an interesting effect. Um, and if the desire for money becomes weaker, then you'll get that change as people move out of treasuries and back into the market. But there's your problem right here. As long as oil continues to do this, it's detrimental and problematic, and certainly not the direction I think that Trump and them were looking for things to go. And so they've obviously got that bottleneck that we knew was going to be there because with the restrictions that were put in place, the bottlenecks, it doesn't resolve quickly. And it's just a failure of some people to recognize that. They got too far ahead of themselves in the excitement of this, that, and the other. Um, from a euro standpoint, still surprisingly holding up, given the fact that tariffs are about to come in, and that is just going to decimate the EU unless there's a resolution. Obviously, the belief is that they're going to throw a lot of money at it, and that somehow is a positive for the euro. Do that math, right? And there you go, gold. Yeah, it's going to continue this because at the end of the day, you still haven't done anything as far as you got the same budget you had from last year, and you've reduced the number of federal workers and things marginally, but most of them are being ordered back to be hired again and stuff. So inflation is not done, and oil is the catalyst that we can see. This is why we talk about it. You got to pay attention to that, and nothing from the crypto space in that category because it's reflective of where the market is and really trading relative to the Nasdaq at this particular stage in the development. What was nice here from the 50K, we ended up with MBI white spike, the breakdown. All right, well that led to the zero, so that was fine. That one was satisfied. Then we ended up with the magenta rise. Boom, got up to the 50%. Oh, MBI white popped up above there. Magenta broke back down. All right, well, that's still an expectation below 50% to the zero. But that didn't quite resolve when we held up at the 23%. You got a little brief spike of magenta, but MBI white still gets its way. And that resolved to the zero right here in the post market. That does fill that gap right there. So, all in all, I'd say that's pretty darn clean. It was a little chaotic, and you obviously would have had to filter through some of the stress of it, but ultimately, the readings resolve themselves that way. You can get slight divergences against it, but that's usually typically them wanting that extra bounce to be able to short additional into it. They didn't get enough at this particular stage, so they needed a secondary rise in order to really go after it, and they did. And that resolves your option guys for the end of the week because they killed calls and puts both, and made out nicely. So from an intraday, we started out with the nice little pump, and then it resolved itself back to 50%, fairly clean there, and then started to have a little bit of trouble maintaining any integrity and strength of it. And then we get these turnarounds that bounce back, but at the end of the day, still resolve back to a net zero. And here we are in the European session. Not all that exciting at this particular stage. It's been sort of mostly lower to weak. A little pop back up from this most recent last little bit where it's dipped down. And I think that once the reality bites that Europe isn't going to work with resolving these tariff situations, that clock is ticking. And when that hits, I mean, it's going to be a blow to the European Union. You don't have to buy a European car. You can buy an American car. So there's no inflation in that setup. And so what do they talk about? They're just crazy. Anyway, that's for a whole other topic. As always, anything relevant, I'll put on the Skype chat for you. Have a good one. Trade well.